Welcome to weekly view on markets. Markets bounced back during this week after Trump paused the tariff for 90 days to go for negotiated settlement of tariff with different countries. Technical charts have indicated bottoming out signals last week. This is confirmed during this week. I had been advocating staggered buying at lower levels in previous week videos. Those who bought at lower levels reaped a good profit this week. It has been my experience that market always bounces back quickly when panic bottom is created. India Wix is a good indicator of a panic bottom. India Wix fell by 46% in the previous week, indicating a panic bottom, but bounced back by 27% this week. Charts indicate further upside for the market in the coming week, and this is supported by FII buying. In this video, we'll also see a special section how mutual fund SIP investors benefit by market correction with data. Let us look at the performance of indices during this week. Nifty gained 6.48% during this week. It closed at 23,851. Within 1 week, it has gained more than 1,400 points. Bank Nifty has gained more than 4,000 points. It has gained 8.606% during this week, closed at 54,290. It has crossed all major resistance levels, and Bank Nifty is headed for all-time high in the coming week. Nifty Midcap Index gained 6.2%, that is 3,075 points, closed at 52,657. Nifty Small Cap Index also staged a 7.56% gain during this week. It gained more than 1,153 points, closed at 16,410. India VIX has come down by 27%. That means the fear in the market has come down. This is what I was indicating earlier. So last week, India VIX was down by more than 46%, which created a panic bottom in the market. So whenever the panic bottom is created in the market bounces back very quickly. That is what has happened during this week. Now let us look at sectoral performances. Almost all the sectors have gained during this week. Private banks have gained the most, that is 8.59%. Financial sector, that is non-banking financial institutions, NBFCs gained 8.03%. Realty sector gained more than 8%. Metals gained more than 8%. Energy, PSU banks, media, infrastructure sector, manufacturing sector, consumer durables, oil and gas, commodities, auto sector all gained more than 6%. Public sector and companies, pharma sector, healthcare all gained around 5%. Remaining all other sectors gained 2 to 3% during this week. Now let us look at technical charts. This is the daily chart of Nifty. We can see here on the chart that Nifty has closed about 23,800, which was a crucial resistance earlier. Nifty is likely to gain further during coming week, and next level of resistance for Nifty is at 24,250. This is the chart of Nifty Midcap Index. Midcap Index also crossed the crucial resistance of 52,600. It has closed at 52,657. Next level of The resistance for Nifty Mid Cap Index is at 54,000. Uh, Mid Cap Index is also likely to gain further in the coming week. The momentum in the market is quite strong. This is a chart of Nifty Small Cap Index. Small Cap Index has also closed above 16,000, has closed at 16,410. So it has crossed the resistance of 16,000. Next resistance level is at 17,000 for Nifty Small Cap Index. So we can expect further upside in the coming week for Nifty Small Cap Index also. This is the chart of Bank Nifty Index. Bank Nifty has been the strongest of all the indices. It has gained more than 8% during this week. The momentum is quite strong. It is followed by good results announced by many banks in the last week and at the weekend. All major banks have posted very good results, and this is coupled with the rate cut by RBI. So financial sector and banking sector looks very good at this point of time. Further upside is possible. Bank Nifty all-time high was recorded in September 2024 at 54,379. So Bank Nifty is expected to cross this and record a new high in the coming week. Now let us look at some of the market fundamentals. RBI Forex Reserve is at 677.8 billion US dollars. It is up by 1.5 billion US dollars during this week. Foreign exchange rate is at 85.45 rupees per dollar. Dollar index is studied at 99.29. So index has come down. That is why rupee has strengthened. Brent crude price is at around $67.96 per barrel. Gold prices is at all-time high of 97,580 for 10 grams 24 carat. FIIs have bought 14,670 crore in this week. They have turned net buyers in last 2 weeks. So market is supported by FII buying, and DIIs have sold 6,470 crore in equity in this week. So FII buying has come back into the Indian market, and it is likely to continue, and that will give to the market and it will take the market to higher levels. Tariff war between US and China is accelerating further. Yet there are no signs of China and US negotiating. But as far as India is concerned and many other countries are concerned, including European Union, they have expressed a willingness to negotiate with US and come to a settled tariff agreement. So with the result, the main fear of tariff war is coming down, and China is also likely to get into negotiation with the US in the coming weeks. That is what is the experts' opinion on the tariff war. Quarterly full results, that is March quarter results for companies have started coming out. IT sector major companies have declared their result, which was lackluster, and even the guidance also is not good due to the global situation. Banks have posted good results. That is why we have seen sharp rise in the bank nifty and financials. The financial sector is likely to lead the market rally. Mutual fund investors should continue their SIP, and correction always benefits them. How the correction benefits mutual fund investors, I have a special section. Let us look at the data. If we look at the data of 2008 market crash, which was a global financial crisis, the Sensex was at 20,000. From 20,000, Sensex fell to 9,000, and from 9,000, Sensex recovered back to 20,000. And if somebody is doing 10,000 per month SIP during this period, these lines which I am showing, they are all monthly SIPs. Every month, investor is doing a SIP of 10,000. That means when market is falling, he is buying at lower levels every month, and he will be getting more units as the NAV of mutual fund is falling. It is just like when share price falls, you for the same amount you get more number of shares. The same thing happens when the NAV falls, you get more number of units for the same 10,000 rupees SIP. And after that, the market started bottoming out, and it has came back to 20,000. So market has gone down and it has come back to the same level. But mutual fund investor, because he is able to buy regularly at every month, he has made a return of 27,000 CAGR. That means in 33 months he has paid 3 lakh 30,000, and the valuation at the end when Sensex has come back to the same level, the mutual fund investors investment value is 4 lakh 19,100. That is a return of 27% CAGR for this period of correction. Now let us look at one more set of data. This was a fall during COVID in 2020. Sensex was at 42,200, and it fell down to 25,700 at the bottom. Then within 1 year again it has come back to 42,600. The mutual fund SIP investor invests 10,000 every month, is averaging NAV and getting more number of units. And the market, when it came back to 42,600 at the same level, he has made a return of 16% CAGR because of the systematic investment plan. That is why I say the SIP investors should not get worried market about market correction. They should continue their SIPs. That will help them to get good returns over a long period of time. And also during correction, at the end of correction, even though market has not given any return, the mutual fund investor gains because of the SIP. That is why it is called systematic investment plan. So this is all for this week. If you like my video, subscribe to my channel. You can share with your friends. You can ask your questions. We will meet again next week. Thank you.